Good morning to our trader network around the world and all our prop traders. Here is the Nasdaq Composite, and we're starting with the daily. And we've already said how strong this Nasdaq Composite has been, and it was the one that first broke out higher compared to this last 6 week rally with the other indexes. It broke out higher, and we actually got up to 3660 right up here. Well, actually, the high of that was 3689 on the Nasdaq Composite, and it's a daily chart, and we've had a small volume. Small volume. What does small volume mean? It means that the broader index has got a lot less volume that's being transacted. We have very low volume. So this correction that I call for is just the beginning. When I go to the weekly, we can see where the first week of August reversal is. We had 3, 4, 5, 6 weeks straight up. When we called the last correction, it's on our website, and we're saying the same thing that had to happen here back in May 22nd, that we were going to come down, and we did. And we came down and we tested a 20-week moving average. We undercut that 10-week, and we came right back up, and we made all-time highs within the calendar 2013 bull run. What I am telling people is that the price volatility is going to increase. It is the dog days of August, of the summer period, seasonality wise. So let's get that straight. One of the things that we want to be very forthright is where the pullback going into September is going to happen, and that the major equities that we trade, like Google, Priceline, Tesla, Amazon, Baidu, all of those equities, all the equities are up at their all-time or close to their highs. Some of them have already started to correct on an individual level. So we are calling for that correction. We won't be wrong. We weren't wrong over here, and we're not going to be wrong here. And that's why we put it out ahead of time, so that the MMT proprietary network trading group around the world, we're around the globe, is that they know that when equities go up to the highs, that they can short those and get great moves, because now that the 6 week rally is out of the way, the volatility in price, even though that this is going to be a very, very, very low volume month in August, and that we hit a record low of the year on the first Monday of August trading, is that we had the lowest volume day of the year. But the correction is in play on the Nasdaq Composite. And with the Nasdaq Composite, what I will throw in this particular video, so we don't have to do two of them, is the actual fear indicators that we have talked about, called the VXN. And I'm going to get to those in 1 second. Volatility Nasdaq 100, which is tied to the Nasdaq Composite. It's 100 stocks in the whole composite of the Nasdaq, and this is the fear indicator. When we sold off last time, we broke out. When we are down here and we have our first weekly up move of 1, 2, 3, 4, 5, 6 weeks straight down. When that was going straight down, we were breaking out in the bull run and all the indexes. Now, what I'm saying is, after the first calendar week of August, we definitely have that fear indicator ramping up, and the higher that this goes, that means that on an intraday level, that stocks will sell off their highs. So the short side of the transaction, the short side of the tape works. But when you get down to the bottom, you buy still you want to buy the long end. It's just that it's not going to be in an intense bull rally as it was in the last 6 weeks. Everything will bounce off of support. So you're not going to get $5 off the bottom in some of them. You may get 3. So the short side is, we will always validate the short side of the tape working when this is breaking higher. This is a weekly level. It's very important to understand it. On a daily level, you can see where we broke out. When we broke out, that was that May 26th or May 22nd correction we called for. And we finally got up there, and that was the peak. And when it gapped down, the bottom was put in the S&P, it was put in all the indexes, and the rally was on. And as we went straight down here, where it's look at, this is the major support level on the daily. On a 60-minute level, let me just be clear that every time that we pull back, we're breaking higher. When we break higher, intraday stocks are being sold short, and we're making lots of money. Then when this goes down, intraday stocks are bouncing off their support levels and going higher when this goes down on a 60-minute level. So right here, this was just the other day. It was on the high here was 1447. And that was on 731. We went straight down here to that support level, and when this was going straight down, stocks were breaking higher highs intraday. Not only that, though, when we started to go up here on this 60-minute level, stocks were selling off, and this is what it looks like on a 60-minute level. So understanding the trade management using the fear indicator is something that's very important. And one of the things that our market maker division is very good at is understanding the Nasdaq Volatility Index related to what? We've already said what it's related to. It's related to the Nasdaq Composite and the Nasdaq 100. The Nasdaq 100 index in itself. But this is the volatility one right here. So once again, folks, if I throw the TQQ in here, that's a bull. TQQ Daily Pro Shares, that's a bull. We can clearly see how that bull broke out and made all-time highs up here at 84. Well, let me tell you that it's going to come down. And we're going to be looking at this one on the weekly level. The bull, TQQ, has the same daily distribution. This was a great short on that bull. And you could have bought some bear. When the bull's going down, the bear ETFs, the opposite end of the trade, is going higher. So basically, it's very important that the MMTs and new MMTs understand that when that bull is selling down on a 60-minute level, and here's a 60-minute, when that bull is going down in value, then the high beta cap stocks are shortable very easily. When the bull rallies up, then that means that the broader leadership of the Nasdaq 100, the Apples and intraday, all of the stocks are bouncing off their lows. So it's very important for you to understand all of the various different components that are related to the Nasdaq Composite, and the TQQQ is one of them. So the bear is the SQQQ. Let's just take a look at it. SQQQ. See if I can get it to pull it up here. Here is the bear, Ultra Pro Short. So when that bear is going down, the TQQ is breaking out. When this is breaking out, then stocks are shortable intraday. When this hits support, when this comes down and hits support, then that means that stocks on intraday at their support levels, when you bounce up, when you come down, but you want to know one thing. When this is going down, the other side is going up. So you want to be able to know how to time it by using the ETF and by understanding which directional price movements is happening, all related to what? All related to here, the Nasdaq Composite that I showed you earlier. So that's one of the things that we're going to be doing. Going to conclude the Nasdaq Composite, the SQQQ, the bear, the TQQQ, the bull, the VXN fear indicator, and how you put them all together to understand intraday directional price movements, both long the tape and short the tape.